All right, let's jump right in. And today I want to do a very quick lesson about following price, because while I know a lot of you are simply just trolls that are bad at trading, there are some of you that still struggle with this concept of understanding that the market could go up or the market could go down. And you think your job is to guess if the market's going to go up or down, and then go very heavy leveraged on your guess and hope that you win. And I assure you, if you think that is the way to trade, you will never be profitable. And even if you're winning in the longer term, you're eventually going to lose your profits. So what you need to do is you need to learn how to put the odds in your favor while managing risk to the best of your ability, which means you need to have more reward in your trade idea than you have risk. That way, when you're winning more than you lose. And this process of consistently winning more than you lose is going to allow you to remain profitable. Now, there are some strategies that have ridiculous high risk reward ratios, but as a result, they also have very low probability of consistently winning. But if every time you win a trade, you make $1,000, but every time you lose a trade, you only lose $100, you can see that you could still lose a lot of trades and still have a profit overall. But generally speaking, you're not going to get very high reward trades with very little risk, and that is why you want something closer to a 1.5 risk reward ratio, which means if you're making $750 per win, you only want to lose about $500 per loss. Now, obviously that reward changes with the exact trade and the exact ticker or stock that you're willing to trade, but that is the general mentality of following price action. So if we're looking at following price action, we always want to be aware of the current trend, because in general, price is going to move with the direction of the trend. Now, as you know, if you've been following along, I told you we were range bound, which meant we had no real strong trend. And now we are seeing bearish engulfing candles breaking out to the downside of the range with a lower high, lower low, and a double triple top on SPY. So we can easily now assume in the short term that we are indeed in a downtrend. So we're not looking for some crazy push to a brand new all-time high. So if your reward on your trade is all the way up here at SPY 525, then you're not doing a good trade because you're going against the current trend. And there's no way you should be thinking that SPY is going straight to a brand new all-time high if we currently have a bearish breakdown and we're starting to roll over. So that's just a very simple concept of what I'm talking about, which means all of our trades should be within the current range and within the current trend direction, which means even if we're taking a long trade, we are not assuming that long trade is going to go on some sort of face-ripping rally to brand new all-time highs. We're simply looking for lower highs before the next lower low. So hopefully that helps some of you. I know this is not easy, because if it was easy, one, you probably wouldn't be watching this video, and two, you would likely be profitable, which I know a lot of you aren't. And just because you pretend to be profitable in the comment section does not mean that you are. Be honest with yourself and learn how to actually trade, and more importantly, learn how to manage risk, because a lot of you simply just talk about slinging calls and puts around, and that is never going to be a profitable strategy. There are profitable option strategies, but not the way you guys are trading them like degenerates. So in the short term, we have a very clear range here. We have SPY 507, which is resistance, and if we break that, we push to the top of the range right around 513. To the downside of the range, we're looking for support between 502 and a gap fill at 497. And each and every day in the morning, I give a morning update based on what I see in the overnight futures session, and that usually gives us a very good idea of what we should be doing. And this morning, I said we were stuck in a range and we were just going to continue to trade the range. And if you look at the price action today, that was really the only way to make profit today, because we really went absolutely nowhere. So if you were swinging short or swinging long, you really didn't have a great trading day. But if you were working that range like I suggested, it ended up being a very solid trading day. So keep all of these principles in mind when you're setting up your trade plans. And if you're not making a trade plan, that's already your first mistake. You need to know what you're going to do by following the price. So if we start to go higher, you need to know exactly what your plan is. And if we start to go lower and continue to break down, you need to know exactly what your plan is. When you know both directions of the trade, then you're simply just reacting to your trade plan, and you have a lot less emotions when you're sticking to a plan, because you're simply being objective and you're following the plan you laid out. Now, building the correct plan that allows you to be profitable is the skill you are working on developing. And of course, with any skill, don't expect to be the best trader overnight. This stuff takes a lot of time and a lot of practice. And more importantly, it takes a lot of discipline and consistency. If every time you start going on a winning spree, you start developing bad habits and then go lose it all, that is obviously still not a disciplined and consistent approach. So everything I just talked about is what I mean by following the price action, because all of those things apply when you are following price action. You need to take everything I just said into account. So if you need to rewind and listen to it again, those are the things you should be focused on as a profitable price action trader. So in the short term, we need to understand we are getting the breakdown. down, and we are looking for an oversold bounce because as you can see, we are still 2 days below this lower Bollinger Band. And even if we do go a bit lower and we continue to ride the lower Bollinger Band, we're simply looking for support just a little bit lower, anywhere between 0.3% or the gap fill at 1.15%. Those are not huge moves to the downside. If we start to push all the way back to the top of the range, we're talking about a 2% move. So you can already see the risk reward is not heavily favoring being a bear and trying to short the market here. Doesn't mean you can't do it, it just doesn't have a great risk reward ratio. And sometimes you can set up a solid trade by simply looking at which direction of the trade has the best risk reward ratio. And as you get better at that, you will start to see that those odds are in your favor, and then you will start to focus on which direction you should be trading. Now also keep in mind, there is no need to short a bull market, especially if you're losing money every time you try to short, because if you go to cash and allow this market to develop and see where it wants to find support, you are still going to have plenty of opportunities to take a trade. So sometimes no trade is the best trade, especially if you're uncertain about the market. Everybody has different skill sets, everybody has different strategies. There's no right or wrong answer. It's more important about being honest with yourself of whether or not you're profitable. If you're not profitable trading, you're really just wasting time, and there's no reason to be wasting time and money. So just keep all of that in mind and really be honest with yourself, because at the end of the day, this is your journey and not somebody else's. So that's today's lesson. In the short term, I think we'll see a bounce. We'll go up somewhere into this range, and I do think we will continue lower and finish that gap fill. And then from there, we need to assess what is likely going to happen after we get these little bits of moves. But in the short term, I think this bounce is coming, and I do think it has the potential to push all the way to the top of the range. So do keep that in mind, because that's a 2% move higher in SPY, and that is a decent long trade. On the NASDAQ 100 triple Qs, again, we went absolutely nowhere today, just like SPY. So it was definitely a range trading day, and we're still oversold 2 days below this lower Bollinger Band. So I'm going to tell you the same thing I said on SPY, that we are stuck in this range, that we are still in a mostly sideways market, but it also does look like a bull trend that is trying to roll over. So even if we bounce, we are still looking for resistance and then a continuation of the lower low after a lower high. And that lower high would likely be anywhere between 435 and up here right around 440. So look for that as a possibility moving into the rest of the week, which means if you're taking long trades, you don't want to get overly greedy on how high this bounce is going to go, because we do have this rollover look. And an easy way to see the rollover is simply just look at all of your moving averages, and you can see they're starting to go negatively sloping, and the faster moving averages are starting to cross below the slower moving averages. Keep in mind, there's nothing magical about a moving average. It's simply just averaging all of the prices in the time frame you tell it to. But if you see that as a visual, it's a very quick way to see that the trend is rolling over. And when the trend is rolling over, you should not be getting extremely bullish. You could still take those long trades, of course, but you're looking to sell at the bounces before the next lower high turns into the next lower low. On the Dow Jones, we were up 0.18% today, and once more we see the Dow Jones holding this support at 377 near the bottom of the Bollinger Band in a market that does look like it double topped. So there's no reason to get overly bullish here in the Dow. So if I had to guess, I do think we're likely going to bounce, but again, we're looking for resistance around the levels between 382 and 385. And then once we get there, we need to see if the bulls are going to break through the resistance or if we're going to get rejected and continue this current downtrend in the short term. Long term, we're still in a bull market, but short term, we could be in a correction, and we don't want to get overly greedy on long trades. If we're getting bounces within a downtrend, we want to take those profits and move on and look for the next best trade. So in the short term in the Dow, look for an oversold bounce, and if we break below 377 and continue this downtrend, we're then going to be looking for 370. On the Russell 2000 IWM ETF, we were down 0.37% today, and we are now 3 days below the lower Bollinger Band in the small caps, and we are below this level at 196. So if we do bounce here, we'll be looking for a resistance right between 196 and 199. And if we get rejected from that, we'll look for a continuation of the downtrend down towards the 200 daily moving average, which is going to be down here right around 189 to 190. So again, we're looking for downtrends here of lower highs and lower lows, but you can take the long trades in the short term because it does look like we are going to get some oversold bounces to lower highs before we continue any lower. On the ARKK ETF, we were down 1.64% today. And again, the small caps and Tesla are not doing well. So this ETF is getting obliterated. And right now we're down below 44 with a gap to fill above here at 44.25. So look at the ARKK downtrend, and you can clearly see lower highs and lower lows with the double triple top rejection. We hit the price target at 44 and failed to hold support there. So if we continue lower, we're looking for 42.4. To the upside, we have the gap fill at 44 and the resistance at 45.7. On the VIX, we were down 4.32% today. So the VIX is trying to push out to that top of the range at 20. And I do think this is where we are going to start seeing the VIX crush. So like I said, with the bounce, I think there's a good chance as the indices are bouncing, we're going to see the VIX coming back down towards 17. Again, once that happens, we have to see if we continue the downtrend or if the bulls take back control of the market. On Bitcoin, we're currently trading right around 63,000. And this is just as simple as watching this support right here at 61,000. And if we break below it, I'm looking for 52,000. To get bullish, we need to break all the way back above 68,000 and 72,000. And even then, be cautious, because even if we go to 75,000, I think there's still going to be plenty of sellers at that price. On Nvidia stock, we're up 1.64% today, and this is one of those stocks that has been a bear killer for 2 years now, and I do think it is trying to get to 994 and 1032, and it's really just a matter of, is it going to go down to 823 first? And if it does go down to 823, is it going to stop there and reverse to all-time highs, or are we going to go a bit lower to 780 and 740? Now, going into earnings on Nvidia is about a month out, and there are a lot of bears that have been destroyed by this stock, so I don't think they're going to be aggressively selling it. And that really is working in the favor of the Nvidia bulls, because as you can see, we've really just gone sideways during this period of correcting, which is a form of correction through time. So don't look for a ton of downside in Nvidia. If we do get more pullback, I think we're going to find support right around 823, which means if you do want a low risk long entry, that is the price you want to use at your risk level. Or if you want to get more aggressive, you're going long up here at the risk level at 857. So if we start to bounce from here, look for a push to the top of the range between 905 and 927. And if we break through those, we should see those all-time highs between 994 and 1032. On Tesla stock, we were down 2.71% today. So we did get the bear breakdowns below the supports at 173 and 167, which means there was a good chance we were going to the bottom of the range at 158, and below that we were going to 154. And with the morning price action, we gapped down below 158 and then went straight down and hit the support at 154 and held support and started to bounce. So in the short term, I think this is a very simple long trade. We're going to go up from 154 support and close the gap at 161. And then once we close that gap, we could continue the downtrend and test the 154 support yet again. Or the bulls are going to take back control in the short term and we'll push back to 167 and 173. So in the very short term, look for this oversold bounce. This should be an easy base hit type trade where you're simply buying near a strong support and selling near a gap fill. And then after that happens, we need to look at price and see if it's looking a lot more bullish or if it's still looking weak with a lower high rejection. On Apple stock, we were down 1.92% today, and Apple is giving a lot of this move back, which is completely normal. When you get a strong bounce, you are usually going to retrace at least 50% of it. And as you can see, we did not hold that critical support I told you right around 172, and below that we were coming down towards 169, and then 169 did hold as support. Now 169 has been a very strong support in Apple stock, as you can see from all of the multiple bounces off of the zone. So it's very difficult to say you should be bearish on Apple stock here, and I think there's a very good chance we could put in that higher low at 169 and still come up here and hit that price target right around 187. Now, obviously, this is going into earnings, and I do like the fact that Apple is going into earnings at low risk entries, which makes it very easy to trade it long. But if you're trading it long, you still need to manage your risk, as you always do, and you want to use the risk levels of the support between 167 and 169. And if those break down, we'll be looking for 163. So jumping back over to the S&P 500, I spent a lot of time talking about what it means to follow price action, and I think a lot of you are starting to understand it, especially those of you that are spending additional time in the Discord server and really starting to understand why these levels are critical and how to trade around them. But if it's still not making sense, consider joining the Discord server, where I do lots of daily and intraday updates and talk about these things in more detail and show charts of the type of price action we're looking for to confirm if we should be going long or short. Especially in this range trading zone, a lot of bad traders simply just get chopped up because they're looking for large moves or moves that don't fit the current market volatility. And it's really important to understand that this is still a stock pickers market, which means bears and bulls are making money, but you need to know which stocks you should be going short on and which stocks you should be going long on. So we're going to continue to focus on that in the Discord server, but now that the indices are pulling back, they're becoming a lot more attractive to trade. And trading the indices is my personal bread and butter. That's what I enjoy doing the most. So this is becoming a lot more exciting now that the indices are pulling back and becoming a lot more volatile as the VIX continues to rise. And then even if the VIX starts to crush, that's still going to make for plenty of volatility in the upward direction, which is going to favor the bulls. And this is a phrase I have not been able to say in quite a while, but volatility does work in both directions. So don't assume just because the VIX is high, that means we have to go lower. We can still get very strong dead cat bounces within downtrends, and those are still going to be very profitable long trades as long as you don't overstay your welcome. So if you want to come trade with me and get access to all of my intraday updates and technical analysis as well as my trade ideas, consider joining the Stocks Channel Trading Discord server, which you can find out how to join by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.